Good afternoon, everyone, and welcome to our YouTube live video, Trending Thursday. My name is Glenn Tompkins, Senior Instructor here at VectorVest. I want to say hello to everybody, and especially I want to say hello to one special person here, if she is here, and that is my daughter. Yes, I just shouted out my daughter, who is overseas right now, doing what she does. And Jazz, if you are here, type in the room. Yes, I just put my daughter out there, and I want to see if she's here. She said that she was going to watch today, and if she is, hopefully she's tuned in yet. Now, I don't know if she's tuned in yet or not, but I am looking for my daughter to pop up if she will type in the room, which is a good day for a dad to see his daughter in a live video that he's doing, and I'm hoping that she types in. If she doesn't, that's fine. That's fine. Lonnie, Charles. No, Jay, you're not my daughter. You're not my daughter. All right, if she gets here, she'll get here, and hopefully she'll type something in the room. She'll say something in the room. If she does, that way I'll know. Unless she comes under a different name, which kids nowadays, she may not. Anyway. Hopefully she'll come up here. So first off, my name is Glenn Tompkins, Senior Instructor here at VectorVest. A lot of people here today. Man, we got a lot of people. Joey said there was a lot of people waiting before we got started. I am glad that you are here. My new people that may be here, a special shout out to you as well. All right, a special shout out to you as well. What is Trending Thursday about? Trending Thursday is all about looking at what's going on in the news. What's the big headline story? Coronavirus. All right, we're going to spend some time on that. But I am going to spend a lot of time in the power of the VectorVest software. For those of you who are new, we do use a software called VectorVest. And I'm going to talk about a lot of the power of the VectorVest software and how we saved our customers in regards to prior to this big move to the downside. All right, so as you can see, everybody can talk to each other. Unlike what we have when we do the Jockey Club, everyone can talk. So Jay, make sure you don't cuss in the room. No cussing. And James says, give us a search for this bottom. That'll come at the right time. I'm not going to tell you a search. I don't know when the bottom is going to happen. I don't know when the bottom is going to happen. And so I'm not going to start talking about a bottom fishing search just quite yet. When it happens, we will definitely have that in store for you. So what we do every week is we get started with our market timing. Let's start off with the home page of the VectorVest software and what's going on. So from the home page, I got the wrong one up. Here we go. Here's the home page. And as you open it up, man, you can see that the market is getting crushed once again. All of the major indices are down. The Dow is down another 1,700 points, down 7.5% for the day. The NASDAQ down 6%. All the way across the board, everything is down in excess of 6% or more, to include the VectorVest composite. For those of you who are new, the VectorVest composite is an indexed arithmetic average of all of the stocks that we track. Currently, we track 8,225 stocks. All of these stocks are tracked in one ticker symbol known as the VVC, and currently the price of all of those stocks aggregate is at $39.33. We track this price on both the day-over-day and a week-over-week basis for the purposes of looking to see if the market is rising or if the market is falling. And today the price of the composite is falling $2.86 to currently be trading at $39.33. So let me start off this way. Coronavirus is big. Coronavirus is not only affecting the United States, it's affecting the globe. And you're going to hear a lot about the doom and the gloom and, oh my gosh, the sky is falling. I'm here to tell you that as a VectorVest subscriber or as a trader in the market, stay focused. Stop putting your head on a swivel and looking this way and looking that way and getting this article or hearing this person and this channel and this newsletter. Stop. Just wait. Markets are going to do what markets are going to do, okay? Understand that we are in bear market territory right now, but markets go through bear markets. They go through bull markets and bear markets. We've been in an uninterrupted bull market since 2019 after the housing crash. So when you start to get into this panic mode, you start to invest emotionally. Once you do that, you're going to make mistakes time in and time out because you're going to try to catch the falling knife. When that happens, all you're doing is you're lessening the ability for you to make money in the market. Take what the market gives you. And this is why everyone in this room should have a trading plan. Your trading plan consists of three things: knowing when to buy, knowing what to buy, and knowing when to sell. Folks, if you can master those three things, I don't care what the market throws at you, you're going to be fine. Yes, we are in unprecedented territory. Yes, we are. And you know something? That's okay. Because as an informed investor, you're prepared whether the market goes up, down, sideways, in and out, up and whatever. So keep that in mind. Don't let the panic take hold of you and how you invest in the market. With the trading plan, you will not invest in an emotional state. Now, who's taking advantage of the current markets? The more aggressive traders. If you're more aggressive, you're taking advantage of the volatility in the market. When the market is up, you're buying stocks long. You're not holding stocks overnight. When the market's down, you sell stocks short. You're not holding stocks overnight. Why? Because the volatility is so whipsawish. That's a good word, isn't it, Joey? Mm-hmm. It's so whipsawish that you might be up today and down tomorrow. Up today, down tomorrow. That's not a good way to try to make money in the market. It's not only about making money in the market, it's about holding on to the money that you make in the market. So I want to put that out there. Instead of having everybody getting caught up in the quagmire of all of the hype and in all of the fear, sit back, understand that you have a plan. If you don't have a plan, then this is a time where you sit on the sidelines, you develop a plan, but you're not taking advantage of the market. Those people who are more prudent, who are swing traders, unless you're swing trading to the downside, just be careful. And those people who are longer term investors, if you're holding on to your retirement stocks, this is a time where options come to play. This is a time where you sell the covered calls on the stocks that you own. Why? Volatility is so high, you're going to get a really good premium for selling those calls. If you want full protection on a stock, buy a put. If you want to protect your portfolio, collar it, which means you buy a put, sell a call. And you do it on an index to collar your whole portfolio. It is a way to offset buying a put. So with all of that being said, folks, the news is the news. The market is the market. Don't let it run rampant in what you do. Have your plan, stay calm, and manage your trades. All right, with all of that, I wanted to get that off of my chest because I'm looking at feeds on Twitter and on Facebook and on CNBC, and man, just so many things going on. It could be a whirlwind of information or a whirlwind of data that you can't fathom and you get overwhelmed by. Don't let it overwhelm you. And a software like VectorVest will definitely help to keep you on the right side of whatever's going on. All right, so all my people who are brand new, who don't have the software, consider taking a trial. What's the trial special? Are we still running a trial special? Do you know?
Yeah, I think it's still running.
We still are running a trial for the VectorVest software for 30 days for 99 cents. Folks, it's $1. You can spend more at Starbucks than you can on having world-class software that'll help you to navigate through the troubling times that we're having right now. All right. So we talked about all of the major indices are down. We're talking about our color guard. Our color guard tracks 3 of our market timing indicators. The price of that VectorVest composite, which is the index arithmetic average of the 8,200 stocks that we have. RT, which looks at the short-term price trend of the market. Is the market in an uptrend or not? This indicator is cast on a scale between 0 and 2. Above 1, the market's in an uptrend. Below 1, the market's in a downtrend. And currently, we're at 0.50. Market's definitely in a downtrend. We have something called the BSR, or buy to sell ratio. Every stock in our database gets a buy, sell, or hold recommendation on every single day. We can definitely see we have 7,000 sell recommendations in the system compared to only 146 buys. This indicator is at a very low, historically low level right now. And then we have one indicator that looks at all 3 indicators in one, called the MTI, or underlying trend in the market, also cast on a scale between 0 and 2. Below 1 is unfavorable. under 1, the underlying trend of the market is down. This is not a time to be buying stocks long. This is either a time to sit on the sidelines, buy puts, sell short, or buy contra ETFs. So people are asking me, what should they do now? That's one of the 4 things you can do. Sit on the sidelines, buy puts, sell stocks short, and or, what was my 4th one I just said? Sideline. No, that was the first one. Sit on the sideline, buy puts, sell short. Dagnabbit. I forgot what my 4th one was. Whatever, somebody's going to say it in the room. Whatever it is. Dang it, I just said it. I just got so much stuff going on in my head. I got a lot going on. Sure. Oh, and contra ETFs, thank you. That was the 4th one. All right, with all of that being said, look at our top stocks right now. What are they? Contra ETFs. Look how much they're up just today. Look how much they're up just today. We're going to talk about that. I'm going to show you how to take advantage of what's currently going on in the market right now. So, even with the news of the coronavirus, okay, there's 3 things that move markets globally. 3 things, only 3 things. Earnings, interest, and inflation. Earnings are still up. All right, companies are still making money. Even though it's going up at a slower rate, companies are still making money. But companies are guiding lower for the next earnings session. All right, interest rates. Interest rates are now even lower than they were about a month ago. Why? Because the Fed is stepping in and they're trying to lower the interest rates to stymie or to build up the economy. All right, that's the Fed's job. The Fed's job is to make sure that people are working and to make sure that interest is at a level, or to bolster up the economy, to make sure everything is good to go. We got jobs, and to make sure that inflation is intact. One of the tools that they use to do that is to lower or raise the inflation rate, the interest rates. Right now, looks like we're going to drop the interest rates again, possibly next week. And at that point in time, I don't know how much further lower we can go in case when the real recession kicks in. How do you know when it's a recession? After 2 quarters of the market going down or the economy going down, we then enter into a recession. We're on the precipice of doing that as of we speak, and it's going to be a global recession. And the last thing that moves markets are inflation rates. Inflation is still right where it needs to be. So given all of that information, the coronavirus is a story, but it has affected 2 of those things, and that's earnings, and it has affected interest rates as well. So I'm going to go to my first story. What did you just do? Say hi, Joey. Joey's messing up my stuff, though.
Well, you messed it up.
Oh, you messed it up. What?
Right here.
The BSR is at 0.02. Is that including inverse ETFs? And the answer to that is yes. That is why the buy to sell ratio will never get to a level of 0 because we have contra ETFs. All right, it will never get to a level of 0. And Don asks, what is RT? Relative timing? And the answer to that, Don, is yes, it is. Relative timing, which is one of our core proprietary indicators, and it looks to tell me if the market is in an uptrend or not. Is it too late to buy contras? No. All right, because with all of the panic that's going on, the market still has downside, and we're going to talk about that in a second. Should gold not go up now? Very good question, Ali, and that's one of my stories today, but let me tell you something. The direct correlation between the market going down and people running over to gold changed back in 2007, 2008. So that direct correlation is no longer there. Now, there will be days where gold goes up when the market goes down, but what you're noticing a lot, the market is going down and gold is going down as well because that direct correlation is not there like it used to be. So hopefully, Ali, that makes sense to you. We will talk about gold today, and I will talk a little bit more about that direct correlation. All right, let's get into the first story. Remember, I talked about what the Fed's job is going to do and what the 3 things that move the markets are? Well, Fed, again, upsizes how much money it will lend to Wall Street. The whole idea of why the Fed is doing this is because the Fed is giving some sense of stimulus to the market. The central bank's expanded repo operations are designed to mitigate the risk of money market pressures. For the second time this week, the Federal Reserve Bank of New York increased the amount of temporary liquidity it was willing to provide to Wall Street's biggest banks, while also expanding how long banks can tap some of its funding. Next story, right in line with that, is the coronavirus. The coronavirus spread could halt the robust job gains. So people are making money, people are working. We've got some of the lowest unemployment rate ever. But now the coronavirus could affect the job gains. The Federal Reserve cut interest rates by 0.5% Tuesday in an effort to stem the economic impact of the coronavirus. Justin Lahart explains why the central bank can support the economy in the fight against the coronavirus, but can't lead it. So I'm a big fan of, yeah, it's okay to try to stem off what's going on with the coronavirus, but the cut in the interest rates can't cure it. It can help it. And, you know, I think it's going to artificially help it. That's my own personal opinion, because the coronavirus, as it spreads more and more, I don't care how much we cut the interest rates, it's not going to be able to stop it totally. All right, so now I'm going to go back into the software, and I'm going to go back to our watch list that we created for this week. Where is that? Viewers, let's go to the watch list viewer. Go to YouTube Trending Thursday. Let's go find 312, which is today. Here's the stocks that we're going to talk about today. I want you to notice something. In the watch list, everything is either a sell or a hold. That is a direct correlation of what's going on in the market. All right, so the two indicators that we look at to see what the market is doing is our VectorVest composite, which is that indexed arithmetic average of all of the stocks in the market. And for those of you who are not subscribers, a lot of you will look at the spiders or the S&P 500. All right, if we look at them, both of them are sell recommendations. Let's just go straight to the graphs. I'm going to right-click, view the stock graph, and let's take a look. This is that VectorVest composite. This is something that I want to show to the people who are not subscribers to the VectorVest software. I'm going to take off something. Where's my earnings per share? And where's my volume? I'm going to take that off too. This is that VectorVest composite. And where's the moving average volume? There we go. Here's that VectorVest composite. Here's the big scare of coronavirus. Last couple of weeks, look at the precipitous fall in the market. If I can tell you that we could have protected you throughout all of this for all of our people who are non-subscribers, let me show you something. I'm going to put on that MTI, which is looking at the underlying trend of the market. Let me go add a parameter, capital appreciation. Is it already on my list? I know why. Let's do this a different way. Let's make this a market timing graph. There we go. Now I can put on the MTI. All right, there's that underlying trend of the market. It does two things for me. One, when that MTI gets to a level of about 1.5, as you can see back here, when it gets to that level of about 1.5, the market is looking for a top. See back here where it did in 2019, April of 2019, what did the market do? It fell. All right, it never got to a top. What did the market do? And again, what did the market do? Move sideways. We got to a level of a top as the market was rising. Market kept rising. That MTI, number two thing it can do, it provided for us a bearish divergence where the market was moving up and the MTI was moving down. How about that? How about in the VectorVest Views, our nightly newsletter, on 2/21, we told our subscribers they shouldn't be buying stocks anymore. That was on 2/21. Not only that, the primary wave of the market went down. Would you have rather gotten out on 2/21 or been riding the market all the way down? Now, for anybody in the room, and I'm going to get people who are going to say this, for anybody in the room says, man, this is hindsight. Hindsight is 20/20. Absolutely. Joey, put my type up for a second. Put my chat up for a second. I want everybody in the room to answer this question who's a VectorVest subscriber. How many people did this information save? Type a me in the room. And I want all of the VectorVest subscribers in the room to answer honestly. How many people did this information, as it was going on, how many people did it help to get out of the market prior to the market going down? And folks, I don't want you to listen to me in this. I want you to listen to the VectorVest subscribers who are in this room. And for those that say not me, that's all right, because you know something? I'm going to have a lot more me's than not me's. And the reason why I'm going to have the not me's, a lot of times, folks, we give you this information as it's happening. It's up to you to have the confidence, folks. It's up to you to have the confidence to listen to the guidance that we give. 221 in the views, we said not to buy stocks. Not only that, we had the bearish divergence in the market. Not only that, the biggest strategies that were making money in the market at that time were contra ETFs. Folks, we give it to you. It's up to you to whether use it or not use it. I can't make you. You ever heard the statement? You can take a horse to water, but you can't make him drink. We can give you the information, but it's up to you to use it. And then look at the people who said me. Look at the people who said me compared to the people that said not me. All right? And folks, that is it in a nutshell. That is the power of the software. We give you information every single night, and we prepare you. And there's nothing that anybody can tell me that we didn't do to not prepare you, folks. We did it. And for anybody who's saying this is hindsight, yeah, no. It was now sight at that time. And I will stand behind that 150,000%. And look at, all you got to do is look at the names in there that said me. Just look at the names in there that said me. And for the ones that didn't say me or said not me, again, all I can do is make sure that we provide you with the information. All right, with that being said, there's the market timing graph. This is what's going on. We're falling. We're still falling. Let's go look at my other indicator I wanted to look at, which was the spiders, SPY, S&P 500. Same kind of scenario. It is just falling. Look at the big wick today. Big selling pressure on today's candle. Not a lot of buying pressure. Down day, gap down, still falling. That's it in a nutshell. So someone asked me, well, where is the bottom? Well, let's go put this on a 1-year graph. Let's go put this on a 5-year graph. The last bottom that we had was back in 2018. This was back on December 24th of 2018. Here's that low. Where did we fall? Right to that level of support of $39.17. Where are we at, folks? Holy smokes. Right at that level right now. Tom, type it in the room. This is why we use things like support and resistance. Where are we right now? We fell right to that previous level of support, which was a big down period back in 2018. Could this be the bottom? Don't know. I'm not calling it. I will not call the bottom, but I will say that right now we are at a pivotal level of support in the market by way of the VectorVest composite. Take it as you will. I will show you how to try to make money in this market the way we are right now. So that is what's going on in the market. And what I'm going to do is I'm going to take that off. Let me see. Joey's trying to show me something. Victor says, also, is this information for long-term trading, dividend investing, or is this for day trading, option swing? So now, from the idea of a long-term investor, we have a market timing call for you. It's called the confirmed calls. The last confirmed down call, let's go zoom in a little bit. The last confirmed down call was on, I'm on a weekly graph. Let me go change that to end of day, 3 months. The last confirmed down call was on 2/28 of 2020. Was that a good opportunity for those people who were investing long-term to get out of the market? The answer to that is yes. All right, what are you waiting for? You're waiting for the confirmed call to move up. It is the slowest, most conservative timing call we have. For those people who are longer-term investors, this is what you're looking for. All right, this is what you're looking for. You're looking for the green arrow moving up for those people who are a little bit more conservative in the market. What do you do with your long positions if you're retirement minded? This is where you start putting on your covered calls, buying your puts, putting on your collars, because these are stocks that you don't want to get rid of. So you protect them the best way that you can. So that's to answer your question, Victor. Hopefully, did that make sense? All right, did that make sense? Hopefully it did. All right. So with that going on, Joey, take that away from me. Let's go. Any questions? That was to see if there was any questions. Let me if I close that, would that be bad?
I think you opened it again, didn't you?
I don't remember. I'm just going to take...
Oh, yeah. Leave it like that.
Just leave it like this? All right. Any questions I need to answer, Joey? Those are the first two.
Just that one. Victor gave you a thumbs up.
He gave me a thumbs up. Excellent. All right, let's go to our next story. Where's my mouse, Joey? Stop messing with my mouse. Next story. Coronavirus fallout. At least 150 companies have warned of earnings hit. That's huge. So when I talked about what moves markets globally, earnings, interest, and inflation, coronavirus is now hurting one of those three right there. At least 150 companies have warned of earnings hit. At first, several companies had to suspend their supply chains or temporarily close brick and mortar locations across China, but expected they could control a slowdown. But then COVID-19 started spreading rapidly across the globe, increasing fears of a global economic slowdown and sending markets falling. All right, so now let's get into the meat and potatoes of what coronavirus stocks you could be playing at this particular point in time. Let's go back into the software. And I'm going to go back to my watch list. This is my watch list. Let's go take a look at a watch list that I've created for you guys called coronavirus stocks. All right. In here, you're going to probably see some stocks that are rocking and rolling. In here, I've got 28 stocks. Now, if I'm trying to be a little bit more aggressive with my coronavirus stocks, why not sort my watch list of stocks by percentage price change? If I do that, how about we have INO, which I am personally trading right now. INO up 12% today. Now, the bad thing, there is a downside. All of these pharmaceutical stocks, none of them have really good fundamentals when I look at the indicators RV and RS. RV stands for relative value and RS stands for relative safety. What is starting to help these stocks, so some of them have an RT above 1. RT looks at the short-term price trend of the stock. Above 1, is the stock in an uptrend or not? Above 1, the stock is. Below 1, it isn't. INO, though, has got some news behind it. This is one of the headline companies that are out there pushing the coronavirus cure, putting it out to trial by way of the FDA. So is mRNA. These are two stocks that are doing so. How about VIR Bio, VIR? Up 10% today. APT up 3.5% today. TTPH up slightly under 1%. But in my coronavirus stocks, only 4 stocks are making money today. A lot of them are still getting hurt, but this is a good place to take advantage of if you are a trader, the coronavirus stocks that are rock and rolling. And as I said, personally, I am trading INO. It's up 12% today. I want to do this. I'm going to bring up that graph of INO. Look at the move. Now, this is a very aggressive stock. Nice move coming off a level of support, bounced up. Because it's so volatile, look at the pullback for 2 days, and then look at the last couple of days riding up as well. Keep in mind, it's a coronavirus stock, it is a biopharmaceutical, and it is an extremely aggressive stock. If you can't trade a stock that looks like this, then you don't trade the stock. But I also want to show you something else. I'm looking at 3 and 8 exponential moving averages. How about when the stock's price pulled back as hard as it did? Let me take price off. Notice my moving averages didn't cross. I love looking at the 3 and 8 exponential moving averages on a stock. It does a good job of keeping me from not panicking just because a stock pulled back as hard as it did. Now, it hasn't regained that high over the last 3 months, but it is definitely trending in the right way, but it's got a closed candle today, so I probably wouldn't buy it today. I've been in it since yesterday, so I caught the gap up and I'm still making money on the stock. But overall today, it's up over 12%, and that's because of the gap up. So when it comes down to looking at what, the companies that are being affected by the coronavirus, why not look at some coronavirus stocks to possibly take advantage of? So I wanted to show you this watch list of stocks. Nonetheless, there's 28 stocks in here. If you want a copy of this list, I'm going to leave this up for a second. Take a screenshot of it. Take a screenshot of this. All right, I'll leave it up for a couple of seconds and then I'll scroll down to give you the rest of the stock so that you can take a screenshot. All right, give you 5, 4, 3, 2, 1. And now I'm going to scroll down to the bottom of the list, take a screenshot of this. This will give you a view of all 28 stocks. Again, give you a little bit of time on them. Some of these are getting smoked. Yes, they are. Some of them are rocking and rolling, but there's going to be days when these are rocking and rolling and days where they're not because of the volatility in the market. So I'm giving you about 5, 4, 3, 2, All right, that concludes my coronavirus story and the stocks that you can look at to try to take advantage of what's going on with the coronavirus. All right, Joey, any questions? No questions. All right, let's get to the next story. Let me go back to my watch list first. So 312. There was no coronavirus stocks in here. This was all about being able to look at the watch list of coronavirus stocks. Let's go to the next story. Something happened twice this week. Circuit breakers. So I wanted to, for the new people who did not know what the circuit breaker was, I wanted to give a good little explanation about what it is. The circuit breakers kicked in after the fiasco we had in the market back on 2007, 2008. And that's why I didn't pull it down, Joey. What it does is when the S&P 500 goes down 7% in a day, the market shuts off. Shuts off for 15 minutes. And then it opens back up. If the S&P 500 goes down to 13% in a day, it shuts down again for 20 minutes. And then the market opens up again. But if the S&P 500 goes down 20% in a day, the market shuts off for the day. It's a good way of protecting investors in the market, folks. So I wanted to show a little story on the circuit breaker and what was going on. This is the first time I've ever seen the circuit breaker go off twice in 1 week like it did today. So again, the coronavirus, whether you believe it's real, whether you believe it's not real, it doesn't matter. All I'm telling you is giving you the news that's affecting the market as a whole because of the coronavirus. All right. Next story talks about gold. So somebody was asking earlier about, well, why is gold not going up as the market is going down? And I talked about the direct correlation between the markets moving. Gold has turned around over the last few years. Now, gold prices rose on Wednesday, which was yesterday, after a steep fall in the previous session, as doubts about the stimulus package proposed by the U.S. President Donald Trump to soften the economic impact of the coronavirus epidemic weighed on risk. It's no longer an epidemic, folks. It is a pandemic. The White House and Congress negotiated measures on Tuesday to bolster the U.S. economy and Americans' paycheck against the epidemic's impact, although there was no immediate sign of a deal. So it talked a little bit about what was going on with gold, but what I wanted to do is I got a watch list of just gold stocks for you, and I want to show you something. Here's the gold stocks. And when I open that up, because the question is gold the right way to go? Well, I've got 48 stocks in my gold stocks watch list. What's the first thing you see? Look at them. All of these stocks are sell recommendations. So everyone is saying, man, it's the right time to buy gold. I'm going to show you something else. I'm going to go down to the bottom. I'm going to show you this watch list average of 48 gold stocks. I'm going to right click on this average, view the watch list average. This is gold in a nutshell, folks. So for anybody who's saying to me, is it the right time to buy gold? This is today's activity on gold. Look at the overall movement of gold. Let's put this on a 3-month graph. Gold has got a little bit of a jagicity going on. That is a Glennism. A little bit of jagicity going on. Look at that. But overall, what's the trend of gold? So to answer the question, when is the right time to buy gold? Well, number one, let's see when gold can find a bottom. Number two, whatever moving averages you want to use. I use the 3 and the 8. Why not wait until the 3 and the 8 exponential moving average cross up like it did here? That was a good buying opportunity on gold until the 3-8 crossed down to the bottom, crossed down to the downside. You would have made money there. All right. Here's another opportunity. 3-8 cross, then it crossed negative right here. You would have made money here. Now, moving averages don't work very well when a stock is moving sideways. You will get in and out, in and out, in and out. But for anybody who's saying it's the right time to buy gold now, I'm going to say to you, not yet. And that is a graph of all 48 stocks. Instead of having to look at any one individually, this is all of them. But I will pull up one stock. Let's go back to my list. And what we use actually to track gold is something called the Huey, or the gold bugs. All right, this is an ETF, and it's right here. The gold bugs, look at that. It's got a high CI, means it goes up more than it goes down, but Look at that. RT on the Huey is already, right now, the RT is telling me that it's below 1. It is not in an uptrend. Let's go pull up the Huey by itself. This is the gold bugs. And look at that. It's not the right time to buy gold. Now, is it at a level of support? Yes, it is, sitting at about 204.44. What am I looking for? Let's see if it can bounce off of this level of support before I think about buying gold. Number one, if I need more confirmation, wait for the 3 and the 8 exponential moving averages to cross. Number two, that's my take looking at the graph of gold at this particular point in time. Joey, any questions? Any questions? We close that. Any questions?
Not really. There's a couple comments I guess we can look at.
All right, so gold miners versus gold bullion, two different animals. I agree with that. Now, buying physical gold is a different story than looking at gold stocks. Many people feel comfortable that no matter what goes on in the market, especially when it goes down, you go buy physical gold. You can do that. All right, you can do that. All you need is the ticker symbols, which you can see. Oh, what is that? I have the mobile watch of the viewer, but no lists. I'm not sure what you're asking, Tim, and I apologize. Maria Hannity thinks coronavirus is, I don't know what that is, Maria. What's the sky rhinovirus? Is that another thing? I don't know. Hannity thinks the coronavirus is a hoax. Listen, a lot of people, and I don't talk politics in here, you know I won't, but it is what it is, a perceived reality. And you know something, Maria? Is it affecting the market? Yeah. Is it affecting the market globally? Yeah. So no matter what you believe, what you don't believe, I'm still going to believe what the market shows me and take advantage of the markets. David says, all of my ETFs RT is at 1.96 or higher. Most are at 2, can't get any higher. Just because it can't get any higher, David, doesn't mean that it can't go any higher. All right, doesn't mean that the price won't go any higher. Keep that in mind. I want you to look at it as a Ferrari. If you're going in a Ferrari, you're doing 200 miles an hour, you're moving fast. When the RT falls to 1.8, well, your Ferrari is now going 180 miles an hour. You're still moving fast. I've seen stocks stay at the value of 2.0 for 2 or 3 months in a good uptrending market. So just because RT is at 2 doesn't mean it can't go any higher. It just means that it's moving really, really fast. And as long as the market's conditions are conducive to the move of the stock, it will continue to move really, really fast. Lonnie says, does RT less than 1 mean no trend or downtrend? RT below the value of 1 means that the stock or a market is in a downtrend. That's exactly what it means. All right, so boom, there you go. Joey, take that away. If I just do this, I'm happy. There you go. Let's go to our next story. So that covered gold. Next one, I want to get into the semiconductors. No virus outbreak can shut down the Nvidia stock. All right, despite Tuesday's broadly positive lift, the markets remain a mess. The benchmark Dow Jones is down 13% on a year-to-date basis, while the tech-centric NASDAQ is off almost 8%. With global panic over the coronavirus from China, it's likely that we'll see more turbulence ahead. Nevertheless, specific companies like Nvidia have weathered the storm quite well. In fact, Nvidia stock is up over 9%. So not only did I want to look at Nvidia, I wanted to look at other companies that were in the same space as Nvidia, which is in the semiconductor. So I'm going to go back to my watch list. And the stocks I want to look at are AMD. I want to look at Intel. I want to look at Nvidia. I want to look at MU. I want to look at, is that it? 1, 2, what am I missing? 1, 2, 3, 4, I'm missing, AVGO. These are the stocks that are in the semiconductor industry, right? Notice that they're all sells, right, as of right now, but Nvidia, let's start with AMD. AMD is over its value, all right? Doesn't make it a bad thing, just means that it's trading at a premium. Intel, under its value. AVGO, nicely under its value. Nvidia, over its value. MU or Micron, over its value. Now let's look at the indicators for VectorVest. Relative value looks at a stock's long-term upside potential, that over the next 1 to 3 years, should this stock outperform or underperform a AAA corporate bond. Above 1, the stock is a good stock to look at holding long-term. So AMD is above the value of 1. That's a good thing. That's a stock that I wouldn't mind holding in my portfolio. INTC, over the value of 1. I wouldn't mind holding in my portfolio. AVGO, nicely over the value of 1. Wouldn't mind holding in my portfolio. So the story talked about Nvidia. Nvidia is overvalued and the upside potential is not nearly as good as AMD, INTC, and AVGO, and the same thing with Micron. Well, let's look at some of the other indicators. Relative safety, RS, looks at a stock's consistency and predictability of company's financial performance. Above 1, the stock is more likely to meet or exceed earnings expectations. We look at AMD should meet or exceed. Intel should meet or exceed. AVGO should meet. All of them. All of these are good, strong companies that make money. All right, RT, all of the RTs that we're in are all below the value of 1. So they are all in downtrends. But the story says that Nvidia is up 9% for the year. If I am looking for a stock, in this space, I'm probably looking at a stock like AMD. Why? Well, it's a little bit overvalued, good fundamentals, not moving up in price. I do like the earnings growth rate. They grow their earnings at a clip of 31% a year, and by far, it's the most out of all 5 of the stocks that I'm looking at. All right, let's take this a step further. Let's view the stock graph of these stocks, and they're all getting hurt by the coronavirus. We all know that. AMD falling. Right now, another level of support. It broke through a level of support here. Oops. Let's go put, oh, come on. Put that on. And then I'm going to put on my levels. Here's a good level of support that it broke through right here. Take off the last close. Let's put on the next stock. Wow, INTC, as good as a stock as it is, coronavirus is killing it. And right now, we broke through 2 levels of support. And right now, here's our 3rd level of support sitting at this low right here. Move down some more. NVDA. Now notice that Nvidia hasn't pulled back nearly as much as the other ones that we just looked at. That gives a little credence to the story. I also want to look at earnings per share. I didn't look at earnings per share on all of these because earnings is the engine that drives the stock's price higher. How about over the last year? Earnings per share on Nvidia is up. Let's look at the other ones real quick. Man, all of these have good earnings. AMD, good earnings. INTC, good earnings. Nvidia, good earnings. But notice Nvidia is not falling nearly as fast as the other stocks. Wow, MU is getting hit hard and earnings is getting hit hard. Earnings is lower than it was a year ago. This is the one that I would pay more attention to as possibly not one that I would want to buy right now. AVGO, look at that fall as well. So Nvidia has got the lowest pullback in this space. So maybe Nvidia may be the good play, but I think long-term AMD may be the better play. All right, so those are my semiconductors. Excuse me, can you explain the difference between the ETFs? When you say the difference between the ETFs, stop, Joe, I've got the question. You move.
I know, but you're reading from the wrong one. I need you to go up here.
Oh, gosh, all right. Asked earlier if Glenn can give us an example of shorting the market. When we get his attention, we'll see what Glenn has to offer. I'm going to talk about that. I'm going to talk about a way to take advantage of the market falling. All right. Will you cover oil stocks? I'm not to that story yet, Chris. Physical gold, good idea. Bought some yesterday, American gold and silver coins from JM Bullion. And again, I'm never going to say no to buying physical gold. A lot of people feel a lot more comfortable owning physical gold. I will never say no to that at all. What else, Joey? INO earnings today after the market. I own INO. We'll see what happens with it. I may not hold it during earnings, but we'll see what happens. Notice how Glenn hasn't congratulated my Seminoles as AC. Yeah, because it's not a real championship. You didn't play for it. You didn't play for it, Rich. So I am not congratulating you. No. All right, going down. Carolina is horrible. So that's for Joey. Could Joey, you keep moving down. I already just talked about that. I already just talked about can you keep moving?
Yeah, because I'm trying to read them.
All right. And Joey's trying to point out the questions. I would have just read through the list and I would have found it. All right. I should have just looked. Yeah, leave me alone. All right. So let's go to my next.
Everything the mouse is on. You can't do that.
Stop talking to me. All right. Now let's get to oil. Saudis increase oil production capacity in the price war with Russia. So Saudis and Russia sat down at the table. Russia said, no, I don't want to lower I want to increase my oil export. And Saudi said, well, no, Russia said they didn't want to increase. They wanted to keep the price where it was. And the Saudis said, all right, you want to stiff arm us? We're going to lower oil prices. What does that do to Russia? Russia goes, no, you don't do that to me. And what happens is now Russia is getting caught out there because nobody wants to buy from Russia because the oil price, they want to charge higher oil prices. And because the Saudis dropped the oil prices down, everybody's buying from the Saudis, they're buying from the US, but they're not buying from Russia. That's what it comes down to. So oil is getting beaten up. Who's that helping? The consumer, because gas prices will go down. All right? And Russia's going, no, this is Mother Russia. We don't want to do that. And now they got to come back to the table, sit and talk to the Saudis to try to hash this out. But the Saudis are so what happens is we got a lot of supply, not a whole lot of demand. And when that happens, oil prices fall. All right? And that's it in a nutshell. So now, with that story being out there, let's talk about oil stocks. I created a new watch list for you guys. All right? Created a new watch list called Petroleum Stocks. Now, what did I do? I went to our watch list for petroleum and I put all of the petroleum stocks in here from all of the different industries that were at least greater than $1 and that had an average volume of at least 100,000 shares. That's what I did. So real quick, if I go down to Industry Viewer, what I did is from the Industry Viewer, I wanted to show you what I did. From the Industry Viewer, I sorted the industry alphabetically. I sorted the industry alphabetically, scrolled down to petroleum. I went through all of the different petroleum industries. I put the stocks, all of the stocks from all of the petroleum industries into one watch list. I then went through that watch list. I took out all of the stocks that were less than $1, and I took out all of the stocks that had an average volume of less than 100,000 shares. And with that, I've now got my watch list of petroleum stocks, which ranks in the number of 80 stocks. I wanted to tell you how I did it because I wasn't going to sit here so that you could screenshot all 80 stocks. All right, that's what I did. If you're not a subscriber to the software, 99 cents will give you the ability to do what I just showed you I did. What do you see here? These are oil stocks. What do you see here? What are the recommendations? What are the recommendations? Every single one is a sell recommendation. Who's telling me that they want to get into oil right now? Now, I will tell you this. Because it is oil, how about overall on the 80 stocks? It's got good upside potential. It's got good upside potential. These stocks as a whole, for the most part, should outperform a AAA corporate bond over the next 1 to 3 years. What's hurting it? Relative timing. Look at that. These stocks are in a tremendous downtrend. Let's do this. From this watch list, let's look at the watch list average. This is oil looking at 80 stocks within the oil industry, folks. For anybody who's telling me it's okay to buy oil yet, no. Look at the earnings per share on oil. Lower than it was 1 year ago. Nothing is good about oil yet. So how can you plan for oil? One, let oil find a bottom. Once it does, watch it. How do you know when a stock finds a bottom? When it stops going down and it starts going up. What else am I looking for? A little bit more confirmation. Not only to bounce off the bottom, but I want to see the 3/8 or whatever moving averages I'm using start to move up. Once that happens, I'm okay with buying oil. For anybody who's playing oil now, it is a super speculative play, and I've got no bottom as of right now. Does everybody understand that? So I definitely want to pull this over. I want to see your comments on what I just said about oil. What do you think? What do you think? I am not ready to buy oil yet. Not yet. And if anybody disagrees with me, I'm curious to know why. I'm curious to know why. All right. So as I do that, I got this up. I'm going to close this out because I'm going to show you I've got petroleum ETFs where I can play oil either to the upside or to the downside, depending on which ETF I'm looking at. How about DRIP, which is the inverse of oil? So when oil goes down, I can buy DRIP. DRIP is up 25% today. All right, what did FinPros? Oil will be 40 again in 3 months. You know me, Rich, I am not going to prognosticate. I will not predict. And, you know, I think that upside potential on that graph, on that whole list is good. So I think it does have upside potential, just not the right sign, right? It's not the right time to be in it. That's my overall goal right now. It's not the right time to be in oil. I don't think that it's going to stay this way, and it does have good upside potential by way of relative value. It's not the right time to get into oil. All right, I need you to go down because I read those. I read all of that. I did. I read all of that as you were going through. I didn't see anything. Unless you see something.
I do. I see it right here.
Okay.
Find it over there.
Okay. Where's it at? Tim, on my viewer, I do not have mobile watch list, but when I click on it, I do have mobile watch list, but when I click on it, there's no list when you clicked on yours. Oh, I'm not looking in the mobile watch list. Over here, it doesn't say mobile watch list, which would have been here. I don't have that. So I created these watch lists that you see here. I've created them, and that's what you would have to do. You would have to create those watch lists. All right, does that make sense? I didn't look at a mobile watch list. I do have that right here, but that's not where these watch lists are created. I created a watch list group called YouTube Trending Thursday, and that's what's in there. All right, does that make sense, Tim? Does that make sense? Now the audio is back. All right, that was Joey, and now I'm back. All right, it's historical info, not my opinion. And I'm still not saying that it's an opinion. All I'm saying is that right now, oil is not the right time to be in. That was the overall statement. I say that oil overall does have good upside potential by way of relative value, but it's not the right time. And you know something? When I look at that watch list of stocks, it'll let me know when it's the right time to get in. Can you explain how to use the 3-8 as contrasted to the 5 and the 40? It is the numbers. Smaller numbers give you a faster move, a quicker entry and exit. 5 and 40, remember the 40-day moving average or 40-minute, depending if you're on an intraday or an end-of-day graph, is a longer time period. The 3 and the 8 are good. Both under 10 will give you quicker entries and exit dons. All right, so I like the 3 and the 8. VectorVest likes the 3 and the 8. It's not a hard rule in the sand that you've got to use 3 and the 8. You got to use whatever you feel comfortable with as far as getting in and out of stocks. So when I looked at the list of petroleum stocks, that was one way to go. And I can look at ETFs on stocks, whether bullish or bearish ETFs, to get in and out of the stocks as well. And actually the bearish on the oil stocks are making money right now. And then I also have bullish on oil when the time is right as well. All right, so there we go. That's on the oil story. All right, let's go to the next story, which will happen to be stocks that caught my attention. Boeing. Boeing falls 5%. Again, with all that's going on with the coronavirus, not only is Boeing getting hurt, how about the commercial airlines are getting hurt? It fell, it traded 215 by 1156 on Tuesday. The volume Boeing shares traded since it started the season was 5.5 million. Boeing is traded in a range of $215 to $237 on the day. The stock is traded $297 at its highest and $215 at its lowest during the past 7 days. Boeing is still on a big volatility roller coaster, especially because of what happened to the 737. Another stock that caught my attention was Starbucks. Starbucks trims guidance due to coronavirus breakout. So there's another stock that, due to coronavirus, is being affected adversely. China business is reeling under the impact of the coronavirus outbreak. However, the company stated that the pandemic disease hasn't impacted its U.S. business, but it is affecting the business in China. Starbucks has closed nearly 80% of its stores in China in early February due to the Lunar Year holiday and the coronavirus outbreak. So for those of you who are Starbucks fans, it's not nearly as big here as it is in China, but because China is a big part of their business, they are trimming their guidance due to the coronavirus outbreak. And the last one that I'm looking at that caught my attention was Walmart. Walmart may cut store hours to combat coronavirus and says a Kentucky associate has tested positive. All right, so there you go. 3 big stocks that did catch my attention in news, which are also coronavirus related. Let's go back to the list. Those 3, let's go back and find today's date, 3/12. And here we go. Let's go open them up. Starbucks, Walmart, and Boeing. Dang it. Walmart and Boeing. All right. Starbucks, pretty in line with its value, so it's not, I'm going to call that fairly valued. Walmart is overvalued, and Boeing, still is undervalued. This is a company that's been around for a long time, so it's still under its value. Upside potential on Starbucks is good. It's at 1.20. This stock should still outperform a AAA corporate bond. Walmart is dead even. Boeing should still outperform a AAA corporate bond, but understand that Boeing is still falling in price. As far as relative safety, earnings on Starbucks should be good. Walmart, okay. Boeing, okay as well. All 3 stocks, relative timing, all 3 stocks are in a downtrend. Now, Walmart's the only one that's a hold recommendation. Starbucks is a sell. Boeing is a sell. How about Starbucks is growing their earnings at a clip of 13%? Companies that grow their earnings are attractive companies. Walmart is only growing at 8%, and Boeing, man, they're still losing money, growing or losing 3% a year. Let's right-click, view the stock graphs on these. Man, Boeing is just getting beaten up. And at some point in time, you say, where's the bottom? Well, the bottom is where the stock stops going down and starts going up. Not there yet. Look at the earnings per share over the last year. Next one, Walmart. A little bit of a sideways mumbo here, is approaching a level of support sitting at 104.38. And a lot of selling pressure. Look at the big wick on today's candle. A lot of selling pressure on the stock. And the stock is now, I do like that it's getting close to that level of support and it's trying to get out of that range and bounce back up. That might not be a bad play. And then at least I have a profit target up to that level of resistance sitting at 115. All right, so I can play that if it bounces off of that level of support. And the last one, Starbucks. Man, Starbucks is getting beaten up, created its own new level of support over the last year. I love the earnings on Starbucks, but because of the coronavirus, it's feeling the effects and moving down in the market. But beautiful earnings. This company makes money. It makes money. And prior to all of this that was going on, it was doing pretty well and fell, found a level of resistance, broke down, and fell again. So those are the stocks that caught my attention. Any questions? Any questions on those?
Yeah, there's a couple.
Let's go take a look, take a look, take a look. All right. Let's go see 6 minutes and counting.
Down here, I think.
Excuse me. Real estate management. Finish up with, please. What do you mean with real estate?
If you had anything for real estate.
I didn't put any, real estate didn't make my news to, this week, so I don't have anything unless there's a real estate story that you want me to take a look at. In a minute, I'm going to give you the opportunity to type in stocks that you want me to look into. Do you expect that for all companies that earnings per share will go down? For many companies, Adrian, I think that earnings are going to be affected. Apple was one of the first companies that came out and said, you know, we're guiding lower because of coronavirus. Now Starbucks is doing it. Walmart is doing it. A lot of companies eventually will have to come and let their investors know that the coronavirus is hurting the bottom line. So all companies, no. Will many companies? Yes. Brian says, does VectorVest earnings per share estimates factor in what's going on in the market, even though companies haven't reported their revised numbers? Good question. Brian, our earnings per share is forecasted 12 months out. So we look at past earnings, we look at current earnings, and we look at what analysts say. We use all of that information to project 12 months out. So our earnings per share is projected 12 months out. So when you see an earnings per share of 350, we're saying that by this time next year, that company should be at 350. So that's what it looks like. And that's how come our earnings per share can change on a daily basis, because it will change depending on what's going on with estimates. All right?
Is it still okay to buy contra ETFs?
Say, is it still okay? Let me do that real quick before I look at your stocks. So I did something in the software.
Repeat that question back.
The question is, it's still okay to buy contra ETFs? I did something, no. Here, I did something in a back tester. I did a strategy a while ago called How to Make Money in a Volatile Market. And it's including looking at the VIX being above the value of 15, showing that there's volatility in the market. So what I did is I have there's watch list, or there's searches in the Unisearch tool. If you go to Unisearch, there's a search in the Unisearch tool under ETFs called ETF pairs, bullish and bearish. So we're looking at bearish stocks as far as ETFs, all right? And then we have their counterparts in the ETF bullish. So what do these ETFs cover? Everything. They look at the financials, they look at gold, they look at oil, they look at the Dow, they look at China, they look at the S&P, they look at the Qs, they look at silver, they look at gas. So I took some of the most popular contra ETFs that cover the whole gambit of the market, and I made an opposite version of them on the ETF pairs bullish. And these are the opposites of all of the ones that we just looked at on the bearish side. All right, I used this in accordance with market timing using the primary wave, and I looked at it since 221, where we started telling people it wasn't time to buy stocks. This back test from 221 until yesterday, not even a full month worth of time, 54%. Now with that, I love that it's up 54%. The bad thing is you're going to give up something. Look at my drawdown at 17%. All right, look at that. It's got a drawdown of 17%. So if you still want to take advantage, because volatility is so high the way it is, looking at the bullish bearish ETFs pairs, whether on the bullish side or on the bearish side, using the primary wave might be a good opportunity to take advantage of what's going on in the market right now. All right, so hopefully that answers out that question as well. And I'm curious to know, did my daughter show up here? Jazz, are you here? I know I shouted you out in the beginning. I'm wondering if you're here yet, and I don't know. I'm just curious to know. But that was a back test that I did since 221 until right now. And someone can say to me, well, you know, that is hindsight. So you know what I'm going to do? I'm going to convert this to a portfolio. Click on OK. And open the portfolio now. This is a portfolio that we can watch going forward, folks. It knows what to do. It knows it's only buying the top 5 stocks. My stops are in place. What I'm going to do is I'm going to keep an eye on this going forward. And as you continue to come back every week, somebody remind me to open up this portfolio to see what's going on. All right, open up the portfolio and see what's going on. But now I've taken that hindsight back test, I've converted it to a paper trading portfolio, and every week we can take a look at what's going on. But this strategy best works when the market is in volatile mode, when the VIX is above the value of 15. All right, so hopefully that makes sense. Who asked me that question? Country, did you do yesterday with one top 20? I have 2 ETFs left and up 17%. Bob, I created that whole portfolio, that ETF portfolio. It wasn't a portfolio, it was a watch list. I created that a few days ago. Created that a few days ago. All right, so with that being said, I don't see any other questions come in. Oh, Brian says estimates. Okay, fine. Well, hold on. Factor in what's going on in the market. Okay, I already answered that question. With that all being said, let's go to the graphs. I'll just start it from right here. Any stocks you want me to take a look at? Whew! Any stocks you want me to take a look at? Now type them into the room. Now, if FinTrade is here, type them in the room. This is your opportunity. Man, I need to take a drink of water. SVXY, comma. Oh, man, O, SVXY, comma, O, comma, ABR, comma, KRG, comma, STAG, comma, Oxy. Oxy is there. Who gave me that? Chris, I know you wanted to see that. SPXL. I already told you what I felt about oil. Dividend investing for me, says Victor. Well, what's Costco? COST? Yep, there's Costco. Comma, CERS. I'm going to try to get to as many of these as I can. I may not be able to look at all of them. There's a lot coming in. Cure, PayPal. I was going to pull up a story on PayPal today, but it just didn't happen. MasterCard, comma, Ford, comma, Geo. I'm only going to take two more. FPI, comma. When you say, I can't do anything investing wise. I don't have anything to give for you, Chris. And one more, LABU. All right. Now, before I go, can you give them a link to the stock analysis report? Do you have one?
Yep.
All right. For anyone that I missed, have a good day, Silver. For anyone that I missed, Joey is going to put a link in the chat box for you that you can click on, and you can look at any stock you want as far as getting a free stock analysis report on. So any stock that I did not type into the room, you can do so by clicking on the link that Joey's going to put in. I'm going to put these all on 3-month graphs. SVXY. This is on the short of the VIX. I wouldn't play this. If I'm going to play the VIX, I'm probably going to play a bullish side of the VIX, like the T-VIX or something like that. All right, something like that. And Joey typed it in. There's the link, and Badger put it in as well. There's the link for you guys for any stock that I missed. Do this real quick. If I click on it, this is what comes up. Where's that at? This is what comes up. Yeah, I'll let you move it. Can't find it. Oh, you're over there. There it is. This is what comes up. You can type in your symbol in your email, and you will get a stock analysis report on any stock that I did not get in. All right? On any stock that I did not get in. All right. So SVXY, I wouldn't play the short side of it because it's going down. I play the short side of it when the VIX is going down, this will go up. But the VIX is going up. So just keep that in mind. Reality income. Man, look at the selling pressure. Big wick today. Broke through a level of support right here. It wasn't at that support yesterday. Gapped down through that level of support. Probably wouldn't be in. REITs are normally a good place to be, but if I'm in this REIT, I'd probably try to find another one right now. This REIT is getting beaten up. It is getting beaten up. Earnings on it is lower than it was 3 months ago. Just be careful with that if you own it. A lot of selling pressure, and right now I created another level of support. Man, it broke through a level here. Just keep that in mind. Just really, really keep that in mind. Let's go to the next one. Man, ABR, another REIT. Neither one of these REITs look good. Right now, neither one of these REITs look good. I'd rather try to find. I gave a REIT last week. Which was it? Was it LP? Somebody's calling me. LPX. Check that out. That was in my hot stock pick. I think it was LPX. This was a REIT that I was looking at. Man, since the hot stock, look at it. When I was doing it for the hot stock panel, it was running. It was a cheap stock that was running. No, that's not it. That's not it. It's LXP. LXP. There we go. So LXP, as the hot stock panel was going on, it was running. This was an inexpensive REIT, and look at it now. It's fallen. REITs are tough to be in right now. REITs are tough to be in it right now. So I'm not ready to touch that just quite yet. And Tim, I've already put all the stocks in that I'm going to take a look at, my friend. I've already put them in. Let's go back. And those are the only, so for you, Tim, you can always click on the link. You can always click on the link for that free stock analysis report. Let's go to, another REIT. Look at all of the REITs that are coming up. I do love REITs, but right now, look at all of them, and none of them are really good right now. I would definitely wait to see if they can find a bottom and if they can bounce back up. I don't see out of all of these REITs, I don't see one that I like, not at all. And that's just by way of the graph. There it is, another petroleum stock. We looked at that whole industry. Now, I do see that Oxy bounced today, but I got a wick at the top. A lot of selling pressure on Oxy today. Open candle, I like that, but I want to see if it can at least take out this gap that this happened right here. Let it go back into that gap, fade that gap, look for the 3/8 to cross. That's where I'd be looking for. That's where I would be looking for. All right, let's go to the next stock, which is, wow, there's the S&P 500. This is the bullish side of it, though. This is the SPXL, long. As long as the SPX is going down or the spiders are going down, I wouldn't short it. I would buy the opposite side, which is the SPXS. The SPXS, as the market or the S&P is going down, that is the one that's going up. That would be the opposite of this. So remember, folks, you don't want to short contra ETFs or short ETFs. Always think about finding the opposite side to play. Because if one is going up, the other is going down. Or if one is going down, the opposite is going up. Let's go to the next one. Costco. Man, found the level of resistance, hit it again before it started running down. I'd really love to see if it could take out that level of resistance, but I've got a level of support here, which it's now closing above. Open candle, a lot of selling pressure, but let's see if it can close above this level of resistance that it's now created, which was former support. That's going to be a positive note, but I really would like to see some confirmation of possibly the 3 and the 8 crossing the upside as well. Man, serious. Another drug biomedical. Man, where did it stop? Tom, type it in the room. Where did it stop as it fell today? Right at support, sitting at 396. So let's see if this level can hold. If the stock level can hold, can it have the opportunity to bounce? But keep in mind, the market's direction affects 80% of the stocks within the market. So if the market is falling, 80% of the stocks in the market will fall with it. Keep that in mind. It has created or come down to this level of support. Let's see if the next couple of days, if it can hold. If it breaks down through it, the stock has got more downside. The stock definitely has more downside. Let's go to the next stock. Apple. I love Apple. My favorite stock in the whole wide world. Not the right time to be in it. Look at the wick today. Big wick. A lot of selling pressure. Little body, but a lot of wick. Earnings on the stock looks good. This is a bad time to be in a good stock. That's what that comes out to. It's a bad time to be in a good stock. Fundamentally, the stock still overall, in my opinion, is good. But man, look at that level. It's breaking down. I'm not ready to touch Apple right now. I love Apple, but I'm not in love with Apple. And not only is it falling, look at the volume on it. Look at the volume on it as well. A lot of people are dumping the stock. All right, Cure. Health sector, health. Man, again, look at it. Look at it. It's not doing well. In a lot of the stocks that you may be typing in, you say, well, you know, I'm looking for it to bounce. It ain't bouncing. Not yet. Not yet. I do see an open candle today. All right, I do. A little body, but look at the wick. That's a lot of selling pressure on the stock. And, you know, it created its own level of support. Let's see if that holds, or if it breaks down, it's got more downside. And the stock overall is just moving down, and it's got a sell recommendation. All right, it's got a sell recommendation. All right, let's go to the next stock. PayPal. There was a story out on PayPal, and I almost put it up here. For some reason, though, I did not. And I need the graph to open up. I'm a little over. Sorry about that, folks. But I want to make sure I can get to look at the stocks that you have. Oh, goodness gracious. It's really taking long. The market's not ready to close yet or nothing. Let's go see. It needs a cure. I'm with you, Fred. It needs a cure. Why does David make you sad, Jake? What did David say? Badger, don't know. You're welcome. This is such good stuff. I don't know. This I need to hear. Glenn is heading into the 6th quarter. He's trying to beat the Miami-Kansas City playoff game in Christmas Eve in 1971. Wow! It's taking a long time. Let's see if the next... here we go. So MasterCard. You know, there's a positive sign here on MasterCard. It's an open candle. Open candle means the price started at the bottom of the candle and went up. So it's an open candle as the stock's price gapped down today. That is a positive sign, but look at the bearish volume on it. As the stock gapped down, a lot of people were selling it. You know what I'm thinking this is here? People are saying enough is enough with MasterCard. Big money is trying to come in. I'm not ready to pull it yet. Let's see, you know something, if you want to be super aggressive, let's see if it can take out today's high tomorrow. Let's see if tomorrow it can take out today's high. If it does, that might be a positive sign. I definitely like the confirmation of looking for the 3 and the 8 to cross. Ford. Man, there's nothing to say. It going down. You ever heard the song, I'm going down if you ain't around? Yep, well, that's what Ford's doing. Ford is just going down. Oh, look at this the last 3 months. Ford is just going down like nobody's business. And it keeps finding a level of support, boom, breaks through. Level of support, boom, breaks through. Level of support, and it keeps doing it over and over. Ford is just going down big time. Let's go to the next one. Geo is falling, and look at, not only are these stocks falling, look at the volume. Look at the jump in the volume. That's bearish volume. And that not only means that the stock is falling, but people are really shorting the stock. So again, falling wicks. This is more of a spinning top candle, wick at the top, wick at the bottom, but a down day nonetheless. And it gapped down as well. Next stock in here, FPI. Again, same kind. This is real estate falling. A little bit of an inverted hammer right here. If you want to call that a shooting star, can't call it a shooting star here. It's probably more of an inverted hammer. Open candle. This could have a possibility to start going up tomorrow. It does have good bullish volume with it with the open candle, but a lot of selling pressure. A lot of selling pressure. Definitely would like to see if the stock can at least take out. Look at these two levels right here. It took out. I want to see it take out that level before I jump on board. All right, and the last stock that we have in here is LABU. I would probably look at LABD, which is the opposite of LABU. All right, and there we go. That's all your stocks. Well, for all of you, for stocks that I did not hit, there is a link that Joey put into the room. I think he's going to put it in again. See that link right there? Click on that link. You can get free stock analysis on the stocks that I was not able to look at today. It was a lot of good stocks. Well, not good. These stocks are feeling the effect of the market. The market's direction affects 80% of the stocks in the market. All right, with all of that being said, I want to reiterate, don't panic about what's going on in the market. And all of the stocks that you gave me, if these are stocks that you're in, you got to make a decision on these stocks. All right, if the market's going down and you're bullish on these stocks, you have to reconsider what you're trying to do with the stock. If the stock is going down while the market is going down, that's because the market's direction affects 80% of the stocks in the market. Don't get caught up in all of the hype. The hype is designed to entertain you and say, man, this is what's going on. As investors in the market, have your trading plan. Understand when to buy, what to buy, when to sell. Knowing what stops you have on a stock will help you to know when to sell. And don't be afraid to take a profit at 3, 4, 5%. I'd rather you do that than to lose 3, 4, 5%. Any of you who are holding some of these stocks that are going down, you got to make a decision on it. That back test that I did looking at the ETF pairs, if you don't have the VectorVest software, you can't do that. Within the VectorVest software, somebody will show you how to set up that back test and use it. All right, so with that, folks, I'm with that DM4 Profit says the trend is your friend. I got a downtrend right now. I totally have a downtrend right now. So if you're keeping that in mind, I'm not ready to tell you to buy anything long. If you're comfortable shorting market, do that. I will do one other thing. I'm going to go to the viewers tab. Actually, I'm going to go to the Unisearch tab and looking at the buying contra ETFs. That's a good search to take a look at. And I want to do something. Because I have real time, I'm going to take my time back and I'm going to show you what they did today. I'm going to take it back to 9:30. Let's actually make it 9:45. Let's say if I run the contra ETF search at 9:45 this morning, I'm going to run it. I'm going to do a quick test of the top 10 stocks. This is since 9:45 this morning, folks. The market is down 2%. Contras are up over 1%. So we're doing much better than the market. Let's say you didn't want to look at 10 stocks. Let's go say the top 5. Let's do the top 5. All right, quick test of the top 5. Only up 0.5%. Well, the market's down 2%. You're still doing okay. All right, so keep that in mind. You want to be able to take advantage. Somebody asked me a question, is it okay to still take advantage of contras? The answer to that is yes, market's still going down. But because a lot of the contras are going to be triple leverage, even if they're not triple leverage, put tight stops on them. Because the market is volatile enough that it could be up today, down today and up tomorrow. All right, keep that in mind. Put tight stops. Put something like a trailing 5% stop. That way you mitigate your losses. All right, and with that, folks, I'm done. I'm done. How many new people in the room? How many of you are new? Type a yes in the room. How many of this was your first time here? How many of you this was your first time here? I really want to shout out to you guys because I want to know, was this information good for you? All right, I got a lot of regulars that are in here and I appreciate that. And if you are new and you haven't subscribed to the page, please do that. Make sure you subscribe to the page. We're sitting at about 9,600 subscribers. I'm trying to grow this to 10,000 subscribers. So if you know people, get them to sign up, at least subscribe to the page. If they're interested in learning more of the market, man, this is where you need to be. This is where, and I see the yeses coming in, and I appreciate for all of the new people that are here, thank you for being here. Make sure you subscribe. I thank you all for being here. And man, this is what it's all about. And we do this every week at 2 p.m. We do this every week at 2 p.m. So thank you for being here. My regulars, thank you for being here, and hopefully the information is useful to you. We went through a lot of stocks today. We went through a lot of news stories today. That's what it's all about. All right, with that, folks, I want to say adios, arrivederci, ciao, au revoir, sayonara. I'm going to see you all next week. So with that, folks, be good. Don't get caught up in the hype. Understand your trading plan. This is where you learn discipline behind your trading plan. Stick to your trading plan. No matter what nobody says on TV, stick to your trading plan. Don't get caught up in all of the hype. All right? VectorVest is a software that's going to help you all the way around. With that, adios, arrivederci, ciao, au revoir, sayonara, blah, 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 blah. Later.